After an 8% jump this month alone, Newell Brands right now is down just about 1%, a little bit of a breather after this morning's strong second quarter earnings report. This despite pressure stemming from high inflation and rising costs of raw materials. Newell Brands is the parent of household names I can guarantee just about every American household has. Rubbermaid, Sharpie, Crock-Pot, baby products giant, Graco, you have Yankee Candle, Pumpkin Vanilla Candle, love that, Mr. Coffee. And while raging inflation continues to shape consumer spending trends, household spending actually rose 1.1% in June, according to new data from the Bureau of Economic Analysis. But why listen to economists when we can ask business leaders who are in the trenches, like Newell Brands CEO Ravi Saligram? He joins us now in a Fox Business exclusive. Ravi, great to have you. What are you seeing right now in the current quarter? Because you have both staples like Elmer's glue and Papermate pens, but you also have higher-end items like Sunbeam grills and Graco strollers.
Yeah, Liz, great to be on the show. We just finished the quarter and reported our 8th consecutive quarter of organic growth, what we call core sales growth, 1.7%. And the first half of this year, up 4%. And that was on comps of 23% last year.
Okay.
So clearly, some of the, we're off to a great back-to-school season. And Sharpie, Papermate, all doing very well, Elmer's glue, etc. And that's all because school learning, in-person learning, is in full force, and that is great.
Yeah.
Where we're seeing some softness is things like Yankee Candle. With the pandemic now sort of receding, people are now making choices, and there's more mobility. But that's why our commercial business is doing extremely well, because that goes into offices, stadiums, restaurants, hospitality, etc. So with this diversified portfolio, we're able to still grow the business. But the key word, Liz, right now with the consumer is all about value, because the consumer is feeling the pinch on gas prices, on food prices. So what we're emphasizing is value. And with the innovations we have, we're trying to figure out ways of whether it's bonus packs, whether it is some price rollbacks, figuring that out. So important customer like Walmart, we just did a rollback on some of our outdoor coolers. Point of sales was up 55% when we did that. So I think value, 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 that's what we're after.
What I like about you is that you have been actually very honest, Ravi, about raw materials costs. You have said that resin, for example, the price of resin has gone way up since the Russia attack of Ukraine. So how are you managing to keep the value of the prices low, even as you watch things like plastics, metals, aluminum? You see all of that going higher. And I know Graco strollers. I had one. There's plastic and there's metal, there's resin, there's all kinds of elements in there that probably cost you more.
Yeah, I think where last year was really where we saw a lot of raw material price increases, especially resin, as you said. That is getting tempered a little bit, moderating a little bit. Where we're still seeing increases is in ocean freight. That is not abated yet, though I think towards the end of the year it will. Our hit on our cost of goods sold is 9%. So that's been substantial. So yeah, we've had no choice but to take price increases, but we've been very careful about modeling price elasticities and then driving productivity. How do we take cost out of our products without lessening quality so that we remain a great value to consumers? And then we're doing other incentives, like you mentioned Yankee Candle before, buy one, get one free on candles, or gift packs, which are a tremendous value. So we're trying to find ways of doing that, but in order to protect our gross margins, we've had to take the price increases as well. So it's a balance, and when you innovate, that's when you're able to show the value to consumer. Value doesn't mean just low price.
I get it.
So for instance, we're launching Rubbermaid Duralite, which is this bakeware, which really goes up to $550, and you can go all the way from oven to table, very attractive. So these are the things that consumers look at and say, okay, it may not be the lowest price, but it's a tremendous value for me.
Okay.
So we look, so you mentioned Graco, like the car seats are forever, they last 10 years. So even though it may be a slight premium, the value is you get it for a long time and your kids are always going to be safe.
Well, it is a moving target, this inflation situation and how the customer is behaving. Because one thing we know, you had mentioned Walmart, you sell to Walmart. Walmart announced that it had degradation at that sort of middle to low end consumer level. But names like LVMH, they've got brands from Bulgari to, the very, very fancy names, Tiffany, and they came out with very strong earnings. So as we continue to watch all of this, and some of the luxury brands are actually doing very well today in their stocks, we will have you back to see it progress because you are in that sweet spot there. It's good to see you, Ravi.
Thank you so much, Liz. Appreciate it. Thank you.
Anytime.